Let's move back to Kenya, take a look at how the markets have fared on the day. Of course, it's results season, a flurry of results out on the day, and the market up by just 0.1%, 4,518 points. Just looking at how the currency is faring against the dollar right now, 86.1. We've had currency strength. In fact, the currency yesterday sitting at the highest level so far this year, and it seems all the fears around the election have somewhat abated, and of course that election looming ever closer over the weekend. So you get a sense that there's a smooth handover of power which is being predicted, but that still remains to be seen. But for the meantime, good news when it comes to the currency and how it's faring right now. And just looking at some of those stocks on the day, Pan-African Insurance, top gainer, sitting up by 7%, and East African Portland Cement gaining almost 7% on the day. On the losers list, Mumia Sugar, the biggest loser, down 17.5%, coming out with its earnings today, and disappointing earnings for the first half of the year. Unga Group also reporting its earnings today, 43% drop there in first half earnings, and the stock down 2% on the back of those. Well, let's delve further into the numbers. We've got Ted Macharia, investment analyst at AIB Capital, standing by from Nairobi. Ted, thanks for your time. Let's just look at the results as a whole right now. Any ones that particularly surprised you today, particular standouts on the day?
I think the market has reflected the results. The companies that did above average edged up in today's sessions, and those that performed very poorly lost. Mumia Sugar reported a 14% drop in profit, citing 30% drop in price of sugar because of inflows from non-COMESA countries in the East African region. We've seen the counter shed 17% today. Unga also dropped profit and was also a loser. On the banking sector, Equity Bank also released their results today. They reported good profit and they were up. KCB was suspended in the afternoon session. It shed marginally before releasing its results, but we expect it to edge up in tomorrow's session.
It seems that there's so many forces against the likes of Mumia Sugar, and it isn't protected in an environment right now where you've got more competition setting up a base in Kenya. You've also got, as you say, the COMESA safeguards which have been ended, and of course that will mean that you've got sugar imports allowed into the country. So what's Mumia Sugar's trajectory looking like right now? I mean, if you just look at their gross profit margins, it tells the entire tale for this period. It was sitting at 33% in the first half of 2012, and it's gone all the way to 2.6%. I mean, is the company on a free fall, or do you think that it will come back and bounce back from this?
The opportunities for Mumia are very many. To start off, ethanol treatment and water treatment still remains a very good business for them, although it dropped in earnings. Also, electricity generation from molasses remains a good growth prospect. In terms of sugar, the company did not hit its optimum capabilities in the last half, so they still have space to grow. In terms of sugarcane growing, the drought in the first half of 2012 affected sugarcane harvest, so that was a factor. But they should also be looking at taking over the privatized sugar companies. We're talking about Western, Chamilil. There's still enough potential for Mumia Sugar to get into.
So there are opportunities, but the sugar business as it stands, we can see the impact of competition for that company. Let's move on to the banking sector, because KCB reporting 14% rise in pre-tax profit to 17.2 billion shillings. They're also upping their dividend there. Tell us about the advances growth over the period and what their credit loss ratio is looking like right now.
The banking sector today, we saw KCB, Equity and Cooperative Bank release their results. All of them had the similarities. The first half interest regime saw profits, so their interest expense grow very largely to about 300% in Equity Bank. In terms of profit, there was a very distinct pattern that the loan book grew, customer deposits grew, and cost to income ratios grew. And as banks are looking to expand their regional footprint, we are seeing them employ different tactics. KCB will be looking to scale down on its staff. Cooperative will be looking to open up new branches, and Equity will be looking to leverage on mobile technology and agency banking. So all in all, there was some uniformity in the results, and there are very many differences in the strategic focus going on. In terms of capital adequacy, the banks did very well. Basel II implementation has been on course, and we've seen the banks beef up their capital ratios in the past 6 months through rights issues and looking for new potential investors.
Yeah, I mean, if you had to back one of the horses right now, if you could call them that, the banks in Kenya, and especially in light of the fact that you talk about they've all got a strategy when it comes to regional expansion, they're all just going about it in slightly different ways. Which of the banks would you be looking at to get exposure to that broader East African footprint?
Well, I would go with different banks for different reasons. Equity Bank, in terms of efficiency, innovation, and outreach, has been very superb. It's a social brand, and it grows very fast, especially we've seen it grow very fast here and in Rwanda and in Tanzania. In terms of the middle class, the SME sector, I think Standard Chartered Bank is the king in that sector. They are yet to release their results, but they had seen a 65% jump by the third quarter. So we'll expect strong earnings from that sector.
And just going
so those are my two banks.
Going to the advertising space very quickly, Scan Group posting a 13% year-on-year fall in full-year earnings. And dividends also down there. But it's interesting that the earnings specifically hit by the expansion into West Africa. They spent a total of 258 million shillings in terms of capex, that relative to 145 million in the previous year. So they're spending a lot for potential growth. Does that mean that don't dismiss the fact that they have, of course, seen profits falling, but you could potentially see an uptick further down the line?
The case for Scan Group is a little bit interesting. It's now trading at a PE of up to 30 because of the earnings drop. And it opened up 2 new stations in Nigeria. The income hasn't yet begun kicking in, but it should be impressive incomes. Their margins dipped, so that would be a point of concern in that their billings grew and their cost of production also grew. So that will be a point to look out for in the future.
In terms of efficiency?
But all in all, the accounts are held steady, but although demand fell towards the end of the trading session.